Hello and welcome to FountainFX on Friday the 24th of July 2015, end of a busy week. Everything's shut down, it's late at night, so I'm just going to quickly run through a few bits of what's happened in the last week, but also to highlight a particular trade that's happened and triggered quite easily in terms of the style of the trade. We're looking at the New Zealand US dollar. Previous week I did share with you about looking at the New Zealand and the Aussie dollar, and we'll look at both of them. But if we go back to the major pairs just before we flick back to here, we can show you that despite the fact that there's been some improvement on the Greek situation, it hasn't really made a lot in terms of movement on the euro. Let's just take a quick look at that. And we can see on the daily chart that very much we saw some recovery on Tuesday and Thursday, price pushed up, but other than that it's been a bit hit or miss in terms of performance. So Monday indecisive, Wednesday indecisive, Friday indecisive, but actually it was Tuesday and Thursday where price actually moved in a significant direction, as you can see on these candlesticks. If we look at the pound, we can see the pound has actually been quite difficult to trade this week. A lot of indecision. It's very much sold off on Thursday. Indecision again on Friday. So in terms of the major markets or the major pairs that people trade, the euro and the pound, not a lot happening. So let's go and take a look at what the New Zealand dollar's got to show for us. So looking at the New Zealand dollar against the US dollar, we can see very clearly that it's in this downward trend. And what we were looking at the end of last week was the fact that there was an area of range-bound price movement before price continued to fall quite rapidly in this particular currency pair and in this trend. So if we flick down to the 1 hour chart, we can see that on the 1 hour chart what I was looking at was this area where price was range-bound, and I was looking at the point, the actual origin of this collapse, as our entry point, which is where the entry is. It's loaded there. And the stop was at the top of above the range. Now I could have brought this down tighter, but the challenge was that as price had actually ranged from the high and the low in that area before, obviously it was higher than that as it came down into it, there was the potential that price, when it got back in, it could have pushed higher further into this before it then continued to sell off. And I've also looked at the fact that, look, there's a bottom of this area. That's my measured move, so that's where I'm looking to take profit at the bottom of this drop. So the risk that I've got is my stop's at the 67.55 and my entry is at the 66.80, I think. Let's just check. Just a drag to modify, which is not really going to help. Risk, therefore, in total, if it will highlight it, there you go. The risk was 65 points, so $650, trading one lot. And the reward is $1,700. So we're looking at roughly 2.5 to 1, I think, or more than 2.5, 2.5 to 1 risk reward. So, but the trade itself was planned based on price action, price movement. Okay, so if we scroll back along this way, now I wasn't watching this. The last time I looked at it, I think price was around about here, so it was like Tuesday or whatever. I took a look at it, and I wasn't too sure whether or not it was actually going to get all the way up into this area before it continued to fall. It did actually come into it, and as we can see there, it did just touch in. Now it hardly moved any way into that particular level before it fell away from there. Now if I was trading it as a day trader, I could have been sitting here watching this and looking at the fact that we now started to see some lower highs form at this point. Obviously this big sell-off candlestick here gives us a big reversal pattern, so at that point I could have basically said, well, look, that's confirmation at the 66.50 that price does want to sell off, and I could have just taken that as my sell with my stop above there and probably placed a larger order size, because I'm literally looking at 40 pips rather than 65 pips of risk, and therefore I would actually be possibly at a higher profit level right now. I'm just above $1,000 in profit as the market closed. I'm looking for obviously 1,700 total profit when it gets down to the bottom here, but that's where we are at the moment. Obviously there's various different ways in which you could trade this, but that's a good example of what's happening. Let's go and have a look at what the Australian dollar is up to. And as we can see, the Aussie dollar is selling off as well, which is what was predicted. Was a lot of range bounding and order flow happening for about 2 weeks actually here, because this is the daily chart. And in terms of the trade that I placed here, I placed it based on all this activity, and as you can see, it actually wasn't triggered. Prices came up to it, didn't get as high, and has sold off, quite rapidly. So to have engaged on this particular trade, it would have been a daily trade. We would have been looking at it every day, not on the swing point of view. So let's go down to the 1 hour. And similarly, you can see I've looked at the area of ranging that's happened here, spikes, etc., and the sell-off, the strong sell-off. And as you can see, I was probably a bit too aggressive or conservative in my trade strategy, in my entries, 0.74. But at this point here, you'd have seen price come into it, sell off here. This candlestick, probably a nice confirmation of sales momentum and sales pressure. And obviously the next one is that doesn't come up to take that out. So that's where, had I been looking at it on the 21st, seeing the reversal, certainly a big sell-off candlestick here, then I may have been thinking about moving my particular trade. I've closed that trade down because it's no longer valid. Price has obviously got as high as it could, and then it's now broken at this point below, well below previous lows at the 0.7340, and it's continued to sell off. So that's where sometimes being very conservative may be great. You do get triggered in, and a very, very simple trade. You don't get much heat going against you, but in this instance I was a bit too conservative. Maybe I should have looked at this order flow down here as a lower level to have triggered my trade. I could have possibly come down to the low looking at this particular doji candlestick that happened, and that obviously that would have triggered that particular trade order there. But I was also looking at the fact that price had previously been up to this level, and I thought maybe if it comes back up it will push it that a little bit higher. Obviously I was wrong, but there you go. That's the joy of trading. You don't lose any money from not taking a trade. Obviously you lose money from taking a bad trade, and there we go. That's it from FountainFX. Have a fantastic week ahead. Look at the news and see what happens this week, but certainly the New Zealand dollar and the Aussie dollar are continuing to sell off, so look for opportunities to sell them. Thank you very much and have a great week. Bye-bye.